weakness in the yen thanks to the change in Japan's policy. How do you see this impacting other Asian currencies and policy? And how should investors position their portfolio in Asia with a weaker yen in mind?
Well, I think at least for the time being, in the very short term, it does put pressure on some of the Asian currencies, especially the likes of Singapore dollar, Korean won, Taiwan dollar, which have a direct competition with Japanese exports. But I think over the longer haul, I am expecting the global environment, especially in Asia, to improve, and that should be a positive for equity markets in this region. So I think in the short term, you may see some more pressure on, for example, Korea, which have been suffered as a result of the weaker yen. But over the next 6 to 12 months, I do have a more optimistic view on the Asian equity markets, largely due to the improving fundamentals of growth. We're seeing more of those coming from data, but also hopefully we will start to see more earning upgrades from the analysts in the next few months.
Do you see a risk of currency wars? And do you see any risks to current rotation from bonds into equities?
Well, I don't think currency was necessarily the thing we're watching out for. If you're looking at a competitive devaluation, frankly, the US dollar has been doing this for many years and no one has said much about it. Obviously, the yen weakness have been very fast and very furious, but it seems that we're also hitting a consolidation phase. So I think overall, the currency depreciation of selected currencies, that may not be the biggest concern at this point in time. I think the European debt crisis, how that unfolds, continues to be at the center stage. Obviously, the Italian election coming up, that's absolutely critical. China, how does the growth can be sustained going forward? I think that will also be very important from an investor's perspective. So in that sense, I think we're not expecting a rapid rotation out of bonds into equities. More likely, given recent data, it seems that investors are rotating out of cash into equities. I think that trend will continue. It will not be a straight line, but nonetheless, I think overall we are expecting a cash reduction year and putting more money into the equity investment space.
The Nikkei 225 is at a 52-week high. How do you see that impacting China's equity markets?
Well, I think investors are not necessarily switching out of China into Japan. In fact, if you look at a lot of the fund flows data, it suggests that flowing out of money market funds or cash into equities, whether it's emerging or Japan. So it's not necessarily that the strong performance of the Nikkei, it's at the expense of just China. In fact, if you look at Chinese stock market performance year to date, it's comparable to what's happening in Japan. So these are the top two performing markets in Asia. I think the reality is there's a lot of funds still in cash waiting for investment opportunities. Clearly, the Japanese policy direction is a very encouraging one, and that's attracting a lot of inflows. But at the same time, in China's case, very convincing, very material signs of turnaround is providing investors also with some degree of optimism as well. So I think both markets will actually see strong interest from investors this year.